Hello and welcome to Layer 1. My name is Kelvin Sparks, and today I'm joined by my co-host, Stephen Gates. I'm excited to introduce our guest for today, Jason DeSimone, CEO of the Arena, as well as a entrepreneur and investor. Welcome to the show. How are we all doing?
Great, Jason. Great to have you here.
So before we begin, Layer 1 is a podcast focused on the intersection of crypto and the real world, and it's brought to you in collaboration with Avalanche. Nothing we say on this podcast is investment advice or financial advice. Make sure to always do your own research. And in today's episode, we will be talking about SocialFi. So, Jason, you have a ton of experience in the SocialFi arena, pun intended. Sorry, it's a bit cheesy, but I had to say it at least once. But that being said, do you like to talk about the growth of the platform itself? I mean, just before we started recording, we were even talking about the changes in names and whatnot. So we'd love to hear more from you on that.
Yeah. It's a pretty crazy story, one for the ages. I think Stephen might remember it, but
I lived it.
Yeah, you lived it front and center. So yeah, the arena was previously called Stars Arena. It was born during the SocialFi Craze. You guys might remember Friendtech in the bear market of 2023, around August or so. And then Stars Arena was launched in September, like a month later. And it was on Avalanche, and it caused a crazy rush. It really went viral, kind of like lightning in a bottle. And it took the Friendtech key model and added a global feed to it. So a timeline similar to X. And just that unlock was seen as like really innovative and novel at the time, because it allowed people to discover users and content creators without gating the chat to start. It saw explosive growth. I forgot the actual numbers at the time, but insane volume in TVL. And then there was a big hack, and this caused a ton of drama. There was $3 million exploited, and at the time I was just a user, right? So I was really falling in love with these tokenized social networks. I was a user. I kind of gained a following around me, and after the hack, the team tried to revive it, and it was very rocky, and it never really regained its former virality. So there were still a lot of users though, and a lot of money. And I saw a lot of potential, a lot of money on the platform. So people started panicking and exiting the platform. I just landed in Amsterdam at Solana Breakpoint, and I got in touch with a few people, and we ended up putting a asset purchase agreement together. And over the course of 4 days, went from a community member to the owner, all in. And this was all like building in plain sight. Crazy takeover. This was 2 years ago, as of November 13th. And since that time, we took, what was a dead platform and built it into what I believe is one of the top social crypto apps. I like to say that instead of just SocialFi. And last thing I'll say is, if you look at the lifespan of a lot of these apps, they're probably like 3 to 6 months. We've managed to not only survive, but grow for over 2 years now. So really excited about this next phase, but it's been a hell of a ride to get here.
I think there's always something special. Like, you can tell when a team is special and a product is special when the people that are in that orbit, like the new entrants that come into that orbit, they all leave feeling inspired. So I remember at this past Avalanche conference at the summit, I had set up, a couple investor introductions for you, people that I knew very well. I would say, dude, like it is uncommon that there's 100% hit rate where every single investor that I met with you guys, at the end of the night, they're trying to find me again. They're like, yo, by the way, thanks for setting up that introduction. Like, that was good. That was refreshing. The Jason and Philip are killers. And I think I see that same sort of refreshing moment happen over and over again, even from the early days, but then even now on Twitter and, recently talking to Colin, like he's a very passionate fella. So yeah, it's pretty awesome to watch you guys and have you guys be building next to us.
I appreciate it, man. No, yeah, Stephen, you've been great. The whole Avalanche ecosystem. And I always say this, like, I think we have an incredible team, but at the end of the day, it's really like the community that we have on there that has allowed us to not only get here, but like keep growing. And yeah, it's been it's really a family on there.
So one of the things I was interested in is throughout your journey going from a community member to really like a project leader, as you kind of messed around with SocialFi, you kind of alluded to friend tech and whatnot. Were there any lessons that you learned that helped you figure out where there was product market fit within the category?
Yeah, definitely learned a lot. And, I kind of had a different vision stepping into this than just the like token gated chat rooms where the creator earns fees. I think that's like amazing when it's novel. And you got to remember, Friendtech was born in like a really dry bear market when people were looking for something new. And I also learned pretty quickly, like the ebb and flows, the crazy volatility around the farming campaigns, right? So if you actually looked at the activity on something like Friendtech, insane spike, insane fees generated pre-TGE airdrop, and then it just fell off a cliff right after. And so with the arena, the goal was, how do we retain users? Because I think that's the hardest thing to do in crypto when people's attention span is like, a few seconds. How do we retain users, and how do we not just attract mercenary capital? Because we also had an airdrop, right? So how do we like not just create a scenario where this is farmed, dumped, and people move elsewhere? And I think what we really led with there that I didn't see with Friendtech or a lot of other apps like this, not to speak badly about them, but we always led with like a North Star like vision, like what we were actually aiming to achieve here, and then constantly iterated on delivering desirable features that people actually needed and wanted. And rather than just relying on like financial mechanics, right, to try to like keep people there. And I think that has allowed us to stay fresh, and it has allowed a lot of people to buy in to this vision along the way.
On that point, can you just rattle off the features? Because the original thing was Friendtech with a global feed.
Yeah.
But now, like after using the app and then just watching you guys iterate, I mean, there's a lot more. So just to give someone who doesn't know, maybe they used Friendtech 2.5 years ago, right? Just rattle off like what are the more Web 2-esque features, and if there's any like blended new crypto features.
Yeah, absolutely. So just to reiterate what Steven said, when we took this over, it was literally just a global feed where you could make a post. You couldn't even upload images, and you could buy or sell one whole ticket. That's what they were called instead of keys, right? And that was the entire app. Since then, we've completely revamped the ticket model. So you could buy fractional tickets, you could send tickets, but we've added a complete suite of features. And I'm not even going to be able to remember all of them off the top of my head. But the ability to upload images in different files, the ability to tip users with any meme coin. And we've seen over 15 million tips sent on this app. We added Stages, which is our version of X Spaces, a social audio feature, which could be ticket gated and tipped. Streaming, and to this day, our streaming's growing like crazy. An entire token launchpad, right, which is taking these other launch pads, but adding an entire social element to it. And we could get into that. And then tons of features like badges. So you could, based on your on-chain identity, have a specific badge tied to your profile and form a community around that. And then, like an entire array of features that, I'm not even remembering off the top of my head, and a bunch more to come. We just sort of launched our V2. So V1 for us was rebirth. We have to secure the platform. That was crucial, right? There was a vulnerability in it. That took a while. And then rebuild all these features, onboard all of these users. And now V2 is expansion. One thing that just came to mind is also a multi-chain deposit function. So similar to FOMO app, if you want to use an analogy, you could deposit Sol, BNB, AVAX, ETH from Base, and in one click swap to any C-chain asset, and we handle the bridging behind the scenes. So this is part of this expansion. New social logins beyond just X. The list goes on. But yeah, it's a completely new app. Anyone who hasn't been on in 2 years wouldn't even recognize it.
Yeah, it's pretty interesting. It was quite a weird experience in that you're like, whoa, people just like sent money. They bought tickets. When you realize, oh, it's tied to my identity in a certain sense. So definitely makes for an interesting UX. What was the thought process behind associating like this Web2 identity and reputation with the Web3 payment rails?
Yeah, I mean, it's exactly that, what you got at, like a reputation and identity layer. You could think about this in two ways, right? You could think about it in terms of identity and reputation. And if you actually look at people's ticket price, it maps pretty well to their activity, their trustworthiness, their like contributions. Like it's pretty accurate. The other way to view the ticket system is in terms of monetizing content. And that's big for us. We allow content creators to monetize better. So the way the ticket system works is like, Kelvin, if you came on and you started, talking about your podcasts and other things you're doing, people would likely buy your ticket to get access to a private chat room with you. And each time they bought or sold that, you would earn fees. Okay. And people have earned hundreds of thousands of dollars through this, believe it or not. So one way I like to think about this is think about like a new novel subscription model. It's liquid subscriptions on a bonding curve. If I want to get to know you more and get access to more of your content, I buy this. I could unsubscribe at any time by selling and the money comes to me immediately. I don't have to like cancel it. And the craziest part is you could actually earn. There's a speculative element of this. So if I buy you early, not only do I get access to you, but like your ticket's going to go up. So I could like make money and subscribe to you versus the very static subscription models we see today. So I think there's two sides to it, identity and reputation, and then sort of like content creator monetization.
Interesting, because I like the idea that you get to almost, it's like your highest LTV customers get the first right of refusal, or this, I say like you get it on the ground, so you capture. It's like these Spotify screenshots. Oh, I have a screenshot on Spotify of someone before they blew up, which is a very, very interesting trend. I did not think. I mean, crypto kind of just makes sense in that regard.
Yeah.
But interesting to see even how the analog says that they place value on this, but you're actually capturing that value a lot better than these legacy platforms could. So I guess my next question would be, how does this scale? Like, because it seems like within, we'll say,
Kelvin, good point. And to refine that, one thing I've been thinking about, like, how does this scale? So you have this piece of technology that is a better, faster, stronger version of friend tech. Now it's not one chain based, but now you can welcome any crypto native to join the conversation and create content on the Arena and monetize it. But the root technology is conversations are happening on the Arena, content's being created with these interesting financial rails. So my next question would be, what direction do you want to take this? Because it's rather flexible. You could go straight to compete against Twitch, like Pump Fun is trying to do. You could go straight to compete with Instagram, Facebook, whatever. Or maybe it stays as a crypto native. Maybe the crypto native market is going to be big enough and it'll grow fast enough that with all these new stablecoin issuers that are coming in, maybe they'll bring their own distributions or whatever. I don't know. I'm just like spitballing or talking this out loud with you, but keen to hear with your perspective, what direction do you want this to grow, or is it just staying inside of crypto?
Yeah, it's a great question. I think to kind of see our perspective on this, you need to like envision a world where it's not this dichotomy of just crypto Twitter and then like the outside world. I still think we have this rift between Web 2 and Web 3. But if you envision a world where Web 3 is the norm, and by that I mean everyone has digital assets, crypto is the main payment rail, right? 365, 24/7 globally. You're going to see crypto embedded into social networks, right? Right now, there's a disconnect. I have to use like 5 different platforms, right, in my daily life. So I actually envision a world where this can be consolidated to have like a one-stop shop for all your like Web3 financial and social needs. Now you could say, well, can't the bigger incumbents just add crypto to it? But I think there's a lot of special things we could do by being crypto native to start. And a big focus on ours is creators earn more, right? So one thing I think will never change about the Web 2 giants is they're rather extractive. The operators are extracting a disproportionate amount off of the user's data and their spend. And on something like the Arena, we take very little. That flows back to users. And through like a token economy, they can have sort of upside in the growth of this. And there could be value accrual back to the users. So it's really merging social and financial. I do think SocialFi is a good term, although it was like stigmatized. So that's kind of where I see this going. I think all of these things are going to merge. And then it's going to be like, well, what are going to be the leading apps? It's going to be where you can earn the most. And if you see how much people earn on the arena relative to like the size of the platform, which still is not huge, or like the size of the team or the funding we have, it's like disproportionate. Like really quickly, like we got a big spaces host. I got on his space. I said, try one stage on the arena. That's what we call it. Okay. This guy earns like maybe $10 a month on X. In his first stage on the arena, he doubled the amount he doubled his audience, and he earned over $100. So he 10x. So that's like his yearly earn on X that he earned in one stage on arena, because people are tipping in crypto. They're buying his ticket, and it's easy. There's like direct monetization built in. So that's where I think arena can always like live. And that's where I'm excited about.
Are you ready for a rapid round of hard-hitting questions?
Yes. Let's go.
So I agree with the thesis, agree with the category, and I agree with how the world will look like in the future, and rather the vision on how the world should look like in the future. Now, hard questions incoming. Lens protocol raised $150, $200 million. Zero traction, zero usage. I think they're the ones that just pivoted into, hey, we're a wallet now, and we're going to focus on being a wallet, which might not be totally accurate, but why did they fail? And like, why do you have such an outsized impact relative to funding raised compared to them? You know, let's call it $150 million. A lot of fanfare, but nothing happened.
Yeah. And for the record, I think you're referring to Farcaster there rather than Lens.
Oh, it's Farcaster. Sorry.
Yeah.
Yep.
All good. It comes down, in my opinion, okay, in my humble opinion, I think Dan Romero is a great builder. I think what it comes down to is the thesis. So if you noticed when I answered the last question, I didn't say we're trying to create decentralized social, right? And just win on the social layer. I said we're trying to win in terms of creator monetization. And that, to me, if we could create a seamless way for creators to earn more through payment, through crypto rails, embedded into a social network, we can, that's always a value proposition that people will get behind, right? I probably don't want to leave X to join Farcaster, but I want to make more money, right? And I just told you how, like an anecdote of how that happens. Let me just give one last caveat. I know these are supposed to be quick. When I say creator, I'm defining that pretty broadly. So I don't just mean like someone uploading pics on Instagram, right? I mean long form written content. I mean live streaming. I mean stages hosts. And I also mean token launchers and project founders, right? We have a mini app store. I forgot so many features. We have a mini app store in the arena, and we're seeing this internet capital markets angle play out right now, where people are launching tokens, building an app, and integrating the token into the app. These are creators too, in my opinion, right? So like any sort of creator that you are, we have a tool for you where you can monetize pretty efficiently. And we take very, very little of it. So you're earning, I think on like Twitch and TikTok, they're taking 50% of your fees. We take 2%, right? So that's a massive difference.
So then, two last ones here to finish up this loop. So then, hot take on Lens protocol raised, I believe, $60 million plus a big fat ecosystem grant from, I even forget the name of the protocol, some L2 probably somewhere. So let's call it like $100 million total raised. Again, similar story. Is it same thing as a thesis or something different?
Yeah, I think there's a lot of nuances. So like we raised a little over 2 million. Okay. So we are like 50x smaller than these companies that you're talking about in terms of raise. And we've, in my opinion, outlasted them. And you could say, well, anyone could just linger on, but we're growing month over month. So I would, anyone who says like, yeah, you're just kind of like carrying a dead horse or something, like I would disagree with that. So just to, I just wanted to put that out there. I think a lot of it comes down to like beyond what I said before, there is a sort of like culture that I think needs to be created. That then rubs off on any new user. So like when a new person comes to the arena, we have like a cult following where, and you guys could get like one of your friends to join. Immediately people will come up and show them how to use the app, explain the vision, like say jump on
I
this.
would agree with that. It was I said something on Twitter that could have been taken as me joining the arena, and I immediately had 5 or 10 DMs from people.
Yeah.
You know, like I would agree with that.
So you could say, well, that doesn't scale, but like I really think like people when they join the arena get a dopamine hit in a positive manner because you also don't need to pay money. Okay, there's little things that are barriers to entry. On Forecaster, you needed to pay, I think, $5. On Friendtech, you needed to buy a key before you could get started. In Arena, you don't need to deposit any money, but you earn right away because people like will buy your ticket. So you're hit with this like immediate experience of notification, boom, just bought your ticket, you're earning money. And then all these people saying, welcome to Arena, like, here's what it is. And I think like that's a culture that we've cultivated. We're not like paying these people. These are genuine community members. And it's like, why did we get this cult following? Well, I say cult in a positive way. I think because of 2 reasons. One is that vision that I said at the beginning, like that North Star of like what we're trying to do and people bought into it. And then the second is like we've treated our users very well. We gave them a big airdrop. None of them sell it. They all stake it, right? It was worth tens of millions of dollars. And you can see how most airdrops do. And before this market pullback, we were like up multiples from the airdrop price. And we take very little from them and we're constantly giving back. So those 2 things, like treating our user base very well, which they normally don't experience in social platforms, and then having like a North Star that people buy into, has created this culture where people kind of want to gravitate here and stay versus more of just like a protocol. And I'm not saying that's what Farcaster and Lens are, but they are really focused on like building out the framework rather than like the culture.
So then last one, Gorilla in the room, maybe the only people that I've seen create any sort of traction on SocialFi, although we could say they cheated because they pushed up before, but Pump.fun. So they rotated into the live streaming aspect. Yeah, what's your take on that?
Yeah, I think Pump, I mean, there's like, that's probably the most like polarized company in crypto, like in terms of people's takes on them. I think they've done extremely well finding a market need and building around that, or a market want, right? And the revenue kind of speaks for itself. People would say we have elements similar to Pump Fund because we have a token launchpad with where tokens graduate, and then we have live streaming. Where I think we differ, and this goes back to probably my answer from the last question, is like I think, incorporate more of the social elements than they do. So on Pump Fund, I'm not talking about the streamers, but the token deployers are still all anonymous. The traders are anonymous. On Arena, you kind of know who's launching things. There's community tools around it. It could become a tipping token. You could get a badge. You could start gating stuff for your community. All of these things really create a communal aspect. And then, we've just built an entire framework, an entire social framework that I think makes sense. It's cohesive. Everything ties together. Whereas on something like Pump Fund, my personal opinion, it's like you have the anonymous token launchers launching memes, and then you have like the streamers. And like, there's not really a connection between the two other than like there's a token involved. So I think like we've created a more cohesive environment around, and we'll see how they develop. They have a lot of capital, so I'm sure they can build some of what we have. But I think for right now, our culture, social features are what's like sticking out for us. We've had a lot of people come from Pump Fund and say like our streaming experience, they enjoy more, etc. So like, I think that's where we might have an angle versus someone like them.
So I'm curious, as we compare, we'll say like these Web3 SocialFi apps versus Web2 social media, where do you see the edges? Obviously, I'd say in like speed of payments and probably margins as well, but the audience is still small. So over the long term, how does Web3 SocialFi beat out Web2, just social media in general, with respect to creator rewards rather than the friend tech differences that you were speaking about?
Yeah. So I think this comes into the whole Web3 ethos, which is in contrast to Web2 for the most part, which is like building a network. Like, so a lot of the talks in Web3 have always been building a network versus building an app. And I think that right there is really important, because when you're building a network, the goal is to align the interests of the stakeholders. And that's where something like a token can really do that, because now the operators have the same incentives as the users. And something like a Meta or an X, there's not the same incentives, right? Like you are paying the protocol, and the protocol is taking those fees.
So really quick, I'm actually curious.
Yeah.
What's the first thing? So I get my friend to use their Twitter to log into Arena. What's like the first thing that you see that gets them in the door and started? Obviously, it seems like you kind of solve the cold start problem via purchasing tickets. You get a little AVAX in your wallet. But beyond that, what's the first thing that I'm putting, or we'll say, a small amount of money into of my own on the Arena?
Yeah, I think the first thing that you would do is either respend the AVAX you've earned to buy other people's tickets, like if you have enough. And if you don't, we have partnerships with Stripe and other credit card payment providers. But I think you would buy other tickets of people you see supporting you, because that's like the first thing you're met with. But from there, as you start exploring more, I think the next would be tips. So you'd be like, this person has great content. Let me send some tips. And then if you want to go deeper down the rabbit hole and deeper down the risk curve, you might start buying some tokens of people that have launched. All of these things are very prominent. But like, if you notice a thread amongst all this, it's tokenization. So even tickets are tokenized. They're tokens on a bonding curve. That was the big unlock there. But then we have tokens not on a bonding curve, right? Just like that trade on DEXs. And then even tips are in tokens. So like tokenization is the common theme here, like networks, building networks, and tokenization. And I don't see Web2 incumbents integrating these aspects like as of now. I don't really see it yet. And you could say they will, but I think there's something about building these natively that you can never really get there. So like, imagine Facebook when it first launched, like had a token that had utility. Like, so I actually used this token on the app, but like as it went up, as the platform grew, this went up. You could say, well, they have a stock, but the tokenization is something that attracts people around the world, 365, 24/7. It's not gate kept. So tokenization is the key here. It's the like center pin of Web3. It allows for more efficient monetization. It allows for less extraction if, there's operators that believe in like PVE. And it allows for network effects. When I say network effects, I don't just mean users. I mean, my interest as an operator is aligned with your interest as a user, right? There's a common token that goes up or down. It's not like I'm extracting your data and and just monetizing off of you, and you hope to get value in return somehow.
Understood. And my last question before I pass it back to Steven, I was curious if you could speak to, like, there's a big debate on Twitter, equity holders versus token holders. And with these almost larger buyouts, who gets rewarded? So I'm curious how you think about that debate from Arena's perspective. Obviously, it's a bit different in that you probably can't legally sell social media accounts, but IP and larger things tied to someone's likeness and how token holders could get rewarded in the future. Be interesting.
It's an amazing question. I've been in the space for a little while, and I've been waiting for the moment when like this topic was front and center. I still think we're in this hybrid, we're in this like in between period where we're trying to figure out these different instruments and how they play together. So what I think bridges the gap here is some of these models you're seeing emerging, such as like the buybacks of tokens based off of revenue that the protocols are generating. Obviously, the most probably successful example of that is Hyperliquid, but then Pump Fund is a great example of that as well, which is like once you start routing revenue, which typically would go to private shareholders, once you start routing that into a token that the public holds, you're really bridging this gap because you're accruing the value. The value that the company's earning is accruing to the token. Now, so there are ways to kind of tie these together. With all that said, the company does still need money to operate. That's something that I don't think a lot of users understand, right? So like, if you want the platform to grow, you want the team to have money to do things. So there's a balance there that probably crypto Twitter doesn't fully grasp yet, a lot of users. So that's one thing. The second thing you brought up is like in terms of acquisitions. And that's where I think it's a little more murky still, because we have seen recent examples, even with Pump Fund, of them acquiring companies and then disregarding the native token that company had before. And so the question becomes, how does an existing token, if a company gets acquired, play into that? And I think that's a matter of, well, first off, you normally see a spike in the token first, but then like it's like, well, what does it become? And this is where I think the future of mergers and acquisitions will get very interesting. It's like, how do you merge an existing token economy into another existing one without leaving this? This is like token holders are kind of a class of owners, right? Like in a company. So how do you not screw this class and make sure that they get value too? And one of the easiest ways that come to my mind is like, burns of existing tokens and airdrops of like new from the company that acquired the other one, or some sort of like a dividend paid out to token holders, as would equity holders get. There's like a lot of things that I think come into the negotiation around these mergers and acquisitions. So to answer your question, it's not clear on that side, but I think we're seeing the bridging of the two. And like, if Arena were to get acquired, I would make sure that in the deal, like the token holders are benefiting. So I think that comes down to the negotiation. Maybe the parent company that's acquiring you doesn't care about your token or the holders, but you as an operator do, right? And you have leverage because they want to acquire you. So that's where you can try to get value back to them.
Yeah. If the dev doesn't care about the token holders, then who will?
Yeah.
Sorry.
Exactly.
I couldn't help myself. But Steven, was there anything you wanted to move to or expound upon?
To me, on all of this, I definitely agree. The governance around tokens is very, very immature. I mean, it's not even plugged in. It's a totally siloed, separate piece of the legal and regulatory infrastructure that exists today. So agree that all that clarity will come, but it's not going to come this year, probably not next year. Like, it's going to be a story that gets constantly played out. And then also, I think token holders will be relatively disappointed with the outcome. But if we're going to really weave in tokens into a governance class, then now they're going to be stacked right up against debt payments, other assets on the balance sheet, different classes of equity. Like, that's already existed. There's already really big things, especially in startup financing, like who's got preferred options, who's got common equity, who's got employee options, who's got preferred equity, what are the liquidation preferences. I mean, that's a whole beast. And right now, tokens slot in neatly as the very last people to eat. Go ahead.
Yeah, well, I was going to say, like, you brought up some great points. If you do believe that everything in the future will be tokenized, including equity, then it's going to be a pretty like seamless transition for new companies, because then you're essentially issuing a token and equity all in one. The question, becomes for these existing like apps and companies that launch tokens before this clarity. That's where it's going to get tricky. But yeah, if you fast forward to a future where even equities are tokenized, they're just going to merge together as one.
It's a philosophical kind of question, actually. This makes me think of Murad and when he was on the Crypto Beat for an episode. He's very big on everything in crypto comes down to community. That's the differentiator at the end of the day. So if you think about token holders and what their role is in the overall business for, we'll say, a DApp, for example, if they think that the entire community is going to leave because they're upset with how this deal plays out, could that be a large enough source of leverage to actually impact these? It seems like right now the answer is no, given what we've seen. But as you think about this in the future, I'm curious what role tokens play in like the software element versus just like the pure token side of what Web3 projects are building.
And if you guys go on this ride with me to push it even a little bit wackier,
Let's do it.
personally, I believe that the world is going to move towards a place where there's going to be, millions of two people companies that are all powered by AI, and they're just as efficient and effective as 200-person companies from today or even like 4 years ago. Look, productivity is going to keep increasing. AI, now you have blockchains, permissionless financial infrastructure. Having these, I think this is relatively known now in crypto, or it's not really a hot take, is thinking about how there's going to be billions of AI agents being created, and they're all going to transact somewhere. And it seems like using Web3 technology is going to be the rails by which they do so. So I guess two things. One, a little bit wacky, a lot of these AI agents will now also become token holders. And so now that's like a whole new thing I haven't thought about. Just thought about it just now. It's like, okay, you're going through an M&A. Like the interest of your token holders are a billion different AI agents, right? Like how do you even value that? It certainly depends on who you're getting acquired by. And it's up to the founder and the acquiring team to figure out what's valuable about the deal. Like do these AI agents represent distribution or not? But more to the point, I guess, where I'm going to steer the conversation, where I'd like to focus on, get your perspective, Jason, is we've talked a lot about how content creators get paid, content creators earn more on the arena according to their alternative options. Well, as AI is dropping the cost of creating content down to zero, I mean, like how much of a trend do you think this plays into you guys? How much of a direction do you think this is something for you to pursue? Like, is it all hype? Is it just sizzle? Or is there some real meat there where maybe you shouldn't even be targeting content creators? Maybe you should be targeting builders who are creating like the best cutting edge AI agents who create the best types of content. Just put it on there and have these agents create content and kind of hone in on what type of content earns the most as their kind of a loss function.
Yeah. The AI discussions are quite interesting. So, all right, I'm gonna get into what Kelvin said first, and then end with Steven, your point. So that is where I think. So Kelvin, you were bringing up like, can a community or like like a diehard cult, like you mentioned, Murad and SPX, like can that be enough of a leverage point in like an M&A to like get value back? And that's where I think it comes back to the community and sort of creating a cult, and where your token holders are really vocal advocates and like diehard believers in what's been built. It's night and day from just like a bunch of bots, like scraping, a token, on another platform. And that is something where like that would play into the mind. Anyone who operates a company who has like a really devoted community behind them, that has to play into their mind, right? Of like, if you're getting acquired and the token holders are going to get nothing, like it's not going to be probably like a pleasant experience, at least on like crypto Twitter for at least for at least a few days or whatever, if not longer. So I think that's where the like having that diehard community. And then this kind of actually dovetails into what Steven was saying, because like that community, if it was just a bunch of like AI agents, that probably wouldn't have the level of like effect, like the same effect as like humans who really kind of have bought in. But I know, Steven, you were focused on a little different of an angle, which is content creation. So for that, so we've launched, so I believe the same thesis that you do, which is like AI will have more and more of an effect on content and social platforms. And to get ahead of that curve, we launched our own companion called Gladius on the arena, and he's getting pretty advanced. He's learning every day. he's about to have some Clanker elements where you can launch like tokens and NFTs through him, but he also just has like the like Grok side of him where you can like pull not just Arena information, but information from anywhere in real time, and also like Arena specific like lore. So he's really cool and he's developing and he's starting to create more content. I think that future actually makes something like the Arena even more compelling, because what you're saying is you're driving down the costs of creating content, but the earning is still there, right? So it's just like any other good, where it's like you're driving down cost. That's just creating a greater margin. In terms of what people want to consume, though, I think it really comes down to the type of content. So if it's just written content that's explanatory, like something like Grok or ChatGPT, I think AI will dominate. If it's like streaming, it's still hard for me to grasp my head around like AI streamers, and I'm sure they're going to come and be maybe better than humans.
Over here, it's just that they're all in Asia.
Okay, yeah, I'm not.
Yeah. Expand your horizons.
There's a few on virtuals and whatnot, AI influencers. They are out there.
Yeah. So like, I know like they exist, but like I don't know the level of like how people would compare that to like top human streamers right now. And my guess is it's nowhere near having surpassed it the way like written content has. So I think, yeah, for now. So I don't know, like the pendulum always swings. So when it's going to get like everything's going to be AI, and then I think people are going to want human connections again, right? And that's where like there'll probably be a premium to like being like a human content creator, because it's like we're sick of like the perfect, AI infused content. We also don't know what's real or not anymore. I can't even tell on X what clips are real or not. So it's going to be a weird future. I don't have an exact answer for you. If I did, I would be building it already.
I think to make it even a little weirder, like when I spend time with the younger generation, the Zoomers and whatever is below, like, dude, they're like, I remember the first time my a buddy's daughter saw ChatGPT, like ChatGPT 4.0, so it's like pretty good and it's taking the world on fire. He's like, hey, check this out. And she's like, oh yeah, so like, hey, of course my computer could talk to me. Like, why wouldn't it? Okay, and so where's the sound? Where's the bell? Where's the whistle? Where's the colors? And it's like, and then now they're getting into AI video generation as well. So I'm actually not sure, Jason. It's like, I think a certain our age group and probably above will put a premium on human experiences, which this market has purchasing power and they're going to put their dollars where they want it. But dude, it does seem like everyone below us in terms of age, it's like, I don't know, man, they're going to grow up in an AI native world where they're going to have 50 different AI agents who create the perfect type of content for them, and all that's on the Arena, and they're going to get farmed for their attention points.
So even it's a great point. I mean, so even in that future though, right? So let's take a future where like, let's just assume an extreme of like 95% of future content is AI generated, right? Like let's say like, or even more, whatever.
Or more. I would say 99.9%. I mean, creating content already right now, it's so cheap. It's like 15 cents to generate a 30-second video. This is the worst it's ever going to be.
Yeah. So even in that future, what are the most desirable platforms for an AI agent or someone using AI to create content? What would they be looking for? Well, it still stands that you're going to want two things: the ability to monetize that better than anywhere else. All that this did is increase your margins. And then two is you're going to want distribution. And the AI is going to have to place a premium. Like if you don't have both in one platform, then it's going to have to decide the trade-off. Like, do I want this to be seen by hundreds of millions of people and maybe earn less, or do I want to just, like earn more? And I'm making an assumption that, there's not a platform that has both of those. Ideally, that's the goal,
It does seem like maximum brain rot is create TikTok from scratch that's AI native for agents with Web3 Reels. And then every agent is maximizing for seconds watched and monetization.
I think you need crypto payment rails like embedded into any future because
Agreed.
also like that's even how AI agents with X402, that's even how they're going to transact. Like if Web 2 was the internet of information, Web 3 is like, the internet of like money and ownership, right? And so that's like the clearest differentiator right now. And tokenization. And then yeah, once again, it gets into like, will the Web 2 incumbents just integrate crypto? It's a little different for them because they're like trying to build that into an existing platform rather than building it from scratch. Or will the winners be these new Web3 platforms that are like have crypto native integrations from the start?
I like that take. It's balanced. I tried to bring us in tomorrow. Steven brought us into 2049. Jason, you brought us home. So that was a power move right there for sure. I like it. Definitely a trifecta. So I kind of want to take this back to Friend Tech. Just one more, because I mean, we spoke with Hasib about it. He looked at it as something that was absolutely beautiful when he first understood the mechanisms and how it worked. And that was like the largest SocialFi platform at the time. So maybe it was then I thought, well, if Friend Tech wins, then everyone wins. Then it was Farcaster came and went. And now kind of moving into this era, though there's like a finite TAM within this creator economy of the future. If Pump Fund wins, does that mean all other SocialFi platforms are to benefit from that in the long run?
I believe so, because just like in Web 2 right now, you use like how many apps do you use in a given day, right? Like no one uses one app for everything they need. What Pump Fund winning? So Pump Fund winning would, first off, I don't think it's like completely a winner take all market, right? That's the first thing. Second thing is that will validate, if by winning you mean like they're drawing an insane number of users that are learning about like,
we'll say expands beyond the CT bubble, for example, in a sustainable manner for that.
Yeah, it's massive win. Like, because with that, you can't use Pump Fund without learning what tokenization is, right? The whole platform is, everything you do involves a token. So even if you're a streamer, like by nature, you're launching a token. So just by that logic, if they win, which to me means what you're saying, Kelvin, will not only draw all these users, but retain them, right? So not just like pay to have them use it like one time. But like if they could retain these users and keep growing month over month outside of the CT bubble, massive win, because now all these people know what wallets are. They know what,
Bots are.
Yeah.
They'll know what market makers are. They'll know.
Well,
They'll know what
that's why,
cabals are.
that's why I gave a caveat. That's why I gave a caveat of retaining users, because I'm assuming if all of them get burnt, they're not going to come back. So we're envisioning it.
I don't think the Believe model or the Pump Fund model or the Zora model, the Jesse model, where everyone launches a coin, I don't think that's going to work, dude. The liquidity is just going to get increasingly, I mean, it already is. Liquidity is already so fragmented that the economics around a coin, like, why is it cool? Jesse launched a coin, and I think it was like 30 million market cap, then went to zero in like a day and a half. Like, why? I don't see how is that going to get XQC or speed.
Here's what we'll say though. Let's say there was a mechanism to reclaim that liquidity once it's okay. There's less than, we'll say 100K in volume for the past 100 days. Yeah, maybe we can consider this token's dead and it's not coming back. So that aside, would that still kind of, you still have the same view, Steven?
I think so. I think the ticket model is better just on a bonding curve, because then that always lives there and it can dump, but at least there's like it can algorithmically come back. But I don't know, on the token side, like there's just so much. It's like sending a lamb to the slaughterhouse. You're going to be run by wolves, where if people are going to keep launching new coins, and then the existing people, all the names already know, Wintermute, etc. They're like, dude, they're pros at extraction from token launches. It's just a losing proposition in my mind to like anything to do with the token.
Let's do a thought experiment that I think will be really, really like interesting, because you guys are getting, my brain working in this way. So let's leave the current like token dynamics of CT, which is like the worst it's ever been, in my opinion. Let's leave those out of the equation here. Like, let me ask you guys a question. What percentage of content creators in the world right now, not even just in crypto Twitter, just in general, would you define as successful?
Successful meaning they do break even. They're professional. They can sustain
like
themselves.
they can
creating.
Yes, they're like professional content creators that have a
I
large
would say
enough
like
following.
0.01, 0.001%.
I'll be less
something like
doomerish. I'll say 2.5%.
Okay. Let's just be generous and say it's 5%. Okay.
that. Really generous, dude.
It's not, but like I'm just doing it for the sake of like what I'm about to go into. So like let's say it's 5% and 95% are unsuccessful as we're defining it. So now imagine everyone's tokenized. It's going to be what you're describing. We're like 95 to 97.5 using Kelvin's number to 99% of these tokens would go to zero because these aren't successful content creators. So they should go to zero. The very extreme version of successful ones will retain value. They're still creator coins worth 30 million plus, right? And if Speed or someone launched one, like that thing would retain value for a very long time. So like that like all that making it a token does, and we don't have near enough liquidity. Like this market's not big enough. It's just the same people trading these. But like imagine this was the norm. You would see, in my opinion, the token distribution of successful versus unsuccessful would just mirror the level of successful versus unsuccessful content creators, with the vast majority going to zero. It would just be an efficient market determining that in real time, versus like the platform's advertisements. Then the next question I would ask you guys is, how does a creator monetize right now? Right. So like if you wanted to go professional and you didn't have a following yet, so you guys are running a podcast, for example. I think you guys got backing for it, but like, let's say you didn't, like, what would be the steps that one would take to become professional? Like, how would you go about that? I'm asking you guys that.
I'd say either you got to build up some kind of following via social media that leads into a newsletter, some kind of like a private gated chat, or sending people like I don't know, advice on potentially savings or aggregation. The way I think about it is almost like saving people cost wise, time wise, or even potentially making them money, which is the stickiest case, but also the hardest. But you'd have to do that while also socially proving yourself that you know what you're talking about in real time.
So like the eventual goal is you get like some sort of brand deal or sponsorship, right? Or you have a direct to consumer model where like people like want to subscribe to you or buy into your like newsletter, or like you're giving them something of value. Like that's the end goal, right? Or like you're leveraging a platform that has insane payouts, which is another form of advertising. Well, you could potentially envision a future where someone's token serves these purposes, right? It's built in token gating. There's revenue earned in real time. And maybe the mechanics right now around trading fees isn't it, but like there's a mechanic to earn revenue in real time. There's validation from the market in real time. Like, once again, right now it's an extractive game, but in an efficient market, like if your token's going to zero, it probably means you don't have any demand. Like no one wants access to you. And then these could be more efficient forms of advertising as well. So like you could see a world where this makes sense, and maybe we're just too early and the mechanics aren't right yet. Similar to like the fact that like digital ownership and like royalties is going to be a thing, but NFTs in terms of like PFP collections probably weren't it, right? So like we're probably at that stage of this, but I think the like fluid token model, there's something there when you can tie it to content creators. So like, yeah, I just wanted to talk through that.
My only pushback, I mean, in the vacuum, I think this makes sense. My only pushback, though, is that people in crypto too often forget that like, Wall Street exists and they play nice with equities and they play nice with the startup ecosystem because that's been mature and relatively well defined. Crypto's got its own Wall Street, decentralized Wall Street. It's got the Chinese cabal, Singapore, Hong Kong, Dubai, US, Latin America a little bit, not so much, Europe a little bit. They also kind of suck. No offense, but a little bit. And in this immature industry, like, yeah, I'm not saying it. As soon as let's say Pump, or let's say somebody comes in $500 million funding, whatever, dream scenario, this is breaking into the mainstream. People are launching tokens. Zora is popping off. Arena is popping off. The idea that like the industry of launching tokens has gotten more. I would say it's one of the more sophisticated pieces of the crypto industry. And then the industry on the first 90 days of trading for a token, also very sophisticated. Yeah, I think they're gonna eat everyone alive. Like that's where the malformed incentives come into play. It's gonna always be a cat and mouse game until some sort of maturity, whether that be through regulation or not, kind of starts forming.
And that's where I think the token mechanics really matter. Because yeah, in the current state, it's easily gameable. But that's also where like this new.
So I'll give you one more piece of pushback.
Yeah.
You see how you feel about this. I have, I'm in the business of helping people launch. I've worked with listing teams. I've worked with market makers. I've worked with that whole entire launch supply chain. And if we say whenever there's a new token mechanic or some sort of platform comes out, the token mechanic, all it does is it creates a new financial market, in my experience. And I don't see this changing going forward. But in my view, it creates a new financial market. And the story of financial markets are that some new rule or some shift happens in the financial market. A new arbitrage gets created. It takes some time for people to discover the arbitrage and price it out. And then eventually gets squeezed, comes back to zero. So if we go down the token mechanic path, one immutable rule set of token mechanics won't work, but it'd have to be like almost to have some sort of seasonality, where as soon as a financial market closes on the current set of rules for how do you launch a token, shoot a token, you gotta have the next one ready. You gotta deploy the next one to keep the playing field level between these sophisticated actors who do these deals 100 times a week, evaluating tokens, looking at tokens, creating deals, looking at deals. And then to the creator who launches a token, once in their lifetime. So it's like, that's the fundamental mismatch. And you see that in like VC fundraising as well. Like that market has gotten more and more efficient. People have gotten better and better at fundraising and deploying capital over the years. But it's really taking that story and we're just trying to programatize it.
It's a great point. So I guess like we could probably talk about this for hours, but for the sake of like keeping this within the limits here, I think like, so we talked about a new form of a subscription model. I think the mechanics of like crypto payment rails that like a creator could earn and see it immediately in their wallet versus like waiting till the bank opens or whatever is very compelling. And then having some sort of fluid like mechanic attached to them. When I say fluid, like, I don't know, I do think the real-time pricing will have some sort of role, because like look
That's
at
a lot of dopamine. That's true.
Yeah. And like look at what's taking off: prediction markets, sports betting. Like you could also view Web3 as the hyper financialization of everything, right? So like if everything has a market, there's probably going to be a creator market, because creators do have value. If they didn't have value, why would advertisers pay millions of dollars? Right? So we're entering an attention economy that's also hyper financialized. People want to speculate and people want to garner attention. It just lends itself towards like, if you see where the trends are going with what's taking off, it kind of lends itself towards something like this. I agree with you. Like the current mechanics and the current liquidity and the current market size, it's probably not going to work. But like, if this could be sustainably like,
Yeah.
you know,
And you're saying that the bet that's being made is as the industry keeps growing and matures, this is one of these asymmetric trends.
this is probably directionally correct, but it's probably not going to look like what it does today, is what I'm saying. And I think all the trends would, if you look at the things that are commanding the most valuations and the highest valuations and making the most revenue, stuff like prediction markets and like instantaneous speculation on anything, 365, 24/7 internationally, I think that trend's going to see maximum impact with content, because content is all, you're literally merging financial, hyper speculation and the attention economy in one. And it's like, that is like a massive market.
So we basically are approaching time. I do want to be mindful since we did say we're going to go a bit over. So Jason, it was lovely having you on. I know we could probably talk about this all day, but I do want to give you your time back. So thank you very much for listening. And yeah, this was Layer 1. See you next time.
Thanks, guys.
It's interesting.